Hi, this is Matthew Cratter from Trader University, and today I want to talk about my favorite 3 trades for right now. If you're worried about this bear market, financial crisis, or just want to see what I'm trading, be sure to hit that subscribe button. So as I see it, there's a lot of uncertainty. We have the virus itself, and we have the policy responses to the virus, and sort of a feedback loop between the two. It's difficult to know how these things are going to play out. So in an environment like this, in a crisis environment, I always try to ask myself, what is the one thing that I'm fairly certain of? And I use that as a foundation for my investments and trades. What I'm not certain about how quickly demand recovers. Do people go back to restaurants? Or does social distancing really have to continue and make it almost impossible for restaurants to function? Do people want to get back on cruise ships or airplanes if they don't have to? Are people going to take their kids to Disneyland? Is Disneyland even going to be able to open for a couple of years? So I don't know these things, and the S&P is still trying to figure things out. We're sort of 50%, kind of in the 50% middle of the trading range. So I have to ask myself, what's the one thing that I am most certain of? And that is the central bank response to this. I think we're in a situation where whether things get better rapidly or if they don't, the Fed is going to have to continue with its monetary stimulus. So obviously Fed funds rate is currently basically at 0 point, the effective rate at 0.005 as of yesterday. Now, when you get interest rates to 0, the only other thing a central bank can really do is to print money and buy assets with it. Money printing, buying treasuries, buying munis, even buying junk bonds. And so we've been seeing, this is not the chart of a momentum stock, this is the chart of the Fed's balance sheet. They've been printing a ton of money, and they've been using it to buy assets, which they then hold on their balance sheet. And it's really just completely gone parabolic. This number was never above 1 trillion before the previous crisis, and in the last year, really in 2020, in the first quarter of 2020, we've gone from about 4 trillion to north of 6 trillion, about 6.4 trillion. I imagine this will eventually go to 10 or 20 trillion. I don't see any way around it. And so the one thing we know is that the money printing is going to continue, and that's the one thing I'm more certain of than anything in the virology or the sort of fiscal response. Now, if Congress decides to spend a lot more money, the Fed is also going to have to print more money to buy those treasury bonds when the government borrows money to spend, to let Congress spend. So this is the one thing I'm most certain about. There's been huge combined with this and all the uncertainty. There's been just huge demand for gold and silver. I'm not a real big fan of silver. It's not quite as scarce as gold. But my first thing that I like is physical gold. If you can't get physical gold, there's this ETF GLD, which is not as good. It's a sort of paper substitute. But you can do some research. Again, none of this is investment advice. You can do some research and see if you're comfortable with the way the custodianship works in this ETF. If you're holding it for a short period of time, it probably doesn't matter. If you're holding it for a long period of time, there's no substitute for physical gold. Now, I do not own GLD right now. I don't own physical gold, and I'll tell you why later in the video. You'll see why. But this is the way to get pure exposure to gold, and gold does very well when the central bank is printing money. So GLD, and it doesn't have any of the weird carry effects that some of the oil ETFs have. It does carry a management fee. I want to say about 0.8%. So that's not great, but this is a way to get exposure to gold. Now, my favorite way to get exposure to gold right now does not involve the physical gold or the ETF. It involves this basket of miners. This is an ETF, the VanEck Vectors Gold Miners ETF, GDX. And if we look at the holdings here, you can just go to Yahoo Finance. I'll put a link in the description notes below. We can see that their biggest holdings are 2 stocks that I've been talking about for probably 12 months on this channel. Newmont is really the big one, and Barrick Gold. The tickers are NEM, ABX. This one trades, a lot of these actually trade on the Toronto Stock Exchange. You can see that Newmont, NEM is 15%, and ABX, Barrick Gold, is about 13.5% of this ETF. But this basically gives you exposure to the gold miners. And the nice thing about gold miners is they have what's called operating leverage. So they have certain fixed costs that they need to cover no matter what. But when the price of gold goes up and they've covered those costs, the profits, or I would say the revenues go straight to the bottom line once they've covered their fixed costs, as well as then they have obviously marginal costs to mine the next marginal ounce of gold. But these have a lot more embedded leverage because of this operating leverage, as well as financial leverage. They obviously have debt as well. And so if you want sort of a juiced version of gold that will do especially well in if gold goes up a lot, this is a nice way to get exposure to this. Again, not investment advice. Make sure you contact your financial advisor and go over it before buying anything. But this is a nice diversified basket of all these different gold miners. Kirkland Lake Gold I've talked about in the past. And then there are a whole bunch you can look at here. The thing that I really like about GDX and GLD as well is that the technicals and the price action is really confirming what we're seeing. So when you have the central bank printing a lot of money and expanding their balance sheet, you would expect gold to do well and gold miners to do well. And you can see that GDX is doing quite well. So there was an initial sell-off in the first phase of the liquidity crisis in February and March of this year, where people were basically dumping everything to get their hands on US dollars and on cash. Gold and Bitcoin went down as well. But we're seeing a really nice, strong rebound here. And it's much stronger. You can see the bounce in the S&P is much weaker than the bounce in GDX. If we scroll out, we can see here that we're trading at, I believe these are all-time new highs. So this is really behaving like a momentum stock. And in times like these, when there are not a lot of momentum stocks available, sometimes commodity ETFs can fulfill the function. I'm not a big fan of the oil ones, as I've talked about in previous videos, but I think this is a really interesting play, especially because it is breaking out. And I do own it. I picked up some yesterday, and I can't even believe it's up 6% today. This is crazy. But this is one that I'm going to swing trade. You guys will have to decide where you put your stop. I'll probably put my stop around the $30 level. You can see that there's a lot of congestion there. If we get a close below 30, I'm probably wrong on this, but it looks like we're about to get a bullish moving average crossover. This blue line is going to cross back above the red line. So just a beautiful looking chart, and it's one of the few things that's really, really strong in this market. And it'll continue to benefit from central bank money printing. So that is GDX. Here's just a weekly chart of it. You can see the same movement where we get just a forced liquidation in the first phase of the financial crisis, and something similar happened in 2008, 2009, where gold sold off really hard, and the gold miners sold off, and then they did very well in the years following, simply because you have a liquidation phase, and then you have the money printing dynamics take over, and people are looking for a store of value and looking for assets that will perform well in an inflationary situation, or at least in a situation where the money supply is being inflated. So we have GLD, or physical gold. We have GDX, which are the gold miners. Really great looking charts. And my third favorite trade right now, which I do own as well, is Bitcoin. I've talked a lot about Bitcoin in other videos, which I'll link to below. I thought this was a great tweet from Preston Pish this morning. Jack Dorsey, obviously founder of Twitter, has one thing listed on his bio, and that is the Bitcoin symbol. So here's the question: if people think Bitcoin won't work, what the heck does this guy know that you don't know? Now, Bitcoin is a lot like physical. It's sort of a form of digital gold, in that it's just as scarce as gold. It's very difficult to increase the supply. There's a fixed supply of 21 million coins. And the supply of Bitcoin is about to shrink. So I'll link to this dashboard in the description notes below. But the reward that goes to miners is going to be cut in half. This is the notorious halving It looks like it's going to happen approximately May 11th. So just in a couple weeks from now. Now let me show you why this is so significant. Now we have the backdrop of all this money printing, which is driving gold up, driving the miners up. Interesting thing about Bitcoin is it is now positive on the year. It's trading right now at 73.81. I believe it closed at the end of last year somewhere around 71.60. So it's actually positive on the year, and that's one thing to really look at. Where's the strength when you have a bad times and most things are down? Where's the strength? The strength is in the gold miners, it's in gold, and it's in Bitcoin as well. Now, what if I told you that half the world's gold mines are about to close? This isn't true, obviously, but something similar is going to happen with Bitcoin. Let me run through that really quickly. So there are 24 hours in a day, and there are roughly 6 blocks of Bitcoin that are mined every hour. Now, every time a miner mines a block, he gets a reward, which is equivalent to 12.5 Bitcoin right now. And then the miners usually sell this Bitcoin on the market to cover their electricity costs. So there's this sort of overhang of supply that's constantly hitting the market. And we can assume, someone can correct me if they know more about the technical aspect of this, we can assume that approximately 1,800 new Bitcoin are being mined every day and sold every day. There's this constant selling pressure. But what's going to happen at the halving is the miner reward is going to be cut in half. This number is going to go from 12.5 Bitcoin to 6.25 Bitcoin. And so the amount of new Bitcoin mined every day is going to fall to 900. In other words, it's equivalent to half the gold mines of the world shutting at a time when everyone wants gold. If we assume that demand stays steady or increases, as we would expect when there's more and more central bank money printing, and the supply of new Bitcoin gets cut in half, we get sort of a supply shock, and we would expect much, much higher prices. This is what we are in fact seeing running up to this Bitcoin now at 7,400. Now, what happened at the last halving? I think this is a good way to track these things. I'm not going to talk about the 2012 halving. I'll talk about the 2016 halving, which happened on July 9th. Now, this is a daily chart of Bitcoin back then. The halving happened approximately here. This is when Bitcoin was much less well known. It was trading around $700. It looks like close to, about $700 at the last halving in 2016. We got an immediate sell-off. I'm not sure what was happening during the summer of 2016. I wasn't really that into Bitcoin back then. But then we can see, if I scroll out, what happened after that halving in the 16 months afterwards. Just an enormous run up. And 2017 was really the year. So at the halving, if we were around, around 700, or high 600s, Bitcoin then, as we all remember, in 2017, ran up to 20,000. So just an enormous increase. And this is typically the pattern. Bitcoin rallies the most in that first 16 months after the halving. It peaks then and usually falls the following 16 months, finds a bottom, and then we get this halving process happening every 4 years. So we're entering the most bullish period for Bitcoin from now and the halving approximately May 11th through the end of 2021. I have some other videos I'll link to. I'm expecting Bitcoin to hit $100,000 by the end of 2021, and possibly sooner, simply because of what the Fed is doing with all of their money printing. So this is a very exciting time. These are my 3 favorite trades right now. I would say Bitcoin is definitely the one where I have the largest position and I'm most excited about. There are obviously a lot of objections to Bitcoin. There are all the kind of common critiques that I get about it. I will link to some videos below that answer that question. Some of the questions, for example, can the government ban it? And various things like this. If you found this video helpful and you want to learn a little bit more about how I trade, especially if you have free time right now and you're stuck at home, I'd encourage you to check out my courses. You can get unlimited access to all these courses for one low monthly tuition payment. So learn to trade stocks like a pro. I have courses here on options trading, futures trading, as well as follow my crypto investments where you can follow along as I invest in Bitcoin and possibly other crypto, as well as the bear market trading strategies course, which a lot of people are finding very useful in this environment. So you get access to all these. You can go to this page. I'll put a link in the description notes below, and you can click on any of these boxes to see the list of lectures, to see the curriculum. If this looks interesting to you, just scroll right down here where it says Get It Now. That'll take you to the checkout page right here. And normally 30 days access is just $125. Get access to all the courses, and they're no long-term contracts or anything like that. So you can watch all the courses, cancel before 30 days is up. But because we're in a recession here, I want to give you guys a coupon code, make it a little more affordable. So if you click right here where it says coupon code and you type in YT99, YT99 as in YouTube 99, click update, and that will change the price from $125 to just $99 for 30 days access. Again, no long-term contracts or anything like that. And if there's something, once you subscribe to the Trader University Premium, if there's a course that you think is missing or a lecture that you'd like to see me make, you can let me know, and I'll record it and post it there for you and for everyone else to benefit from. Hope you guys found this video helpful. Please hit the subscribe and or like button if you did, and let me know your questions and comments in the comments section below. Hope you guys are all staying well, and I'll see you in the next video.